Thank you so much, Jessica, for the presentation. I'm really happy to be here at the Global DeFi Summit with a royal flush of co-panelists with me. So I'm Kristina Lucrezia Cornèr, acting editor-in-chief at Cointelegraph, and I'm happy to present here Tyler Scott Ward from Banbridge.
Yep, it's nice to meet everybody.
How are you doing?
Doing well.
Great. Scoopy Trooples from Alchemix. How are you doing today?
I'm good. How are you? It's great to be here.
Awesome. Thank you very much. And Dr. Adel Elmessiri from Dell.
It's an amazing to be here. Very interesting times, and I'm loving every minute.
Well, we will be talking today about how decentralized lending and borrowing will disrupt traditional finance forever. I like this word, forever. I remember moderating a panel at the Global DeFi Summit a year ago, and I was checking my notes. So like in 1 year, the total value locked in DeFi markets has increased from like 300 million to over $5 billion. Where are we now today? At around 50 billion. So my first question to you is, how do we keep growing at the same pace? I mean, at least in the long term. I know that the volatile markets definitely is something that we keep thinking about, but what should be happening in order for us to discuss in a year from now the same pace of development of the DeFi market?
So let me take a stab on it. I think there are a lot of good things that's happening in spite of us. I mean, look around us with all the monetary systems that just keep printing. So basically, the devaluation that's happening, the inflation that keeps popping its head around that, makes everybody wonder. I mean, what's next? What should I do with my money? Where can I put it so that at least it can preserve its value? Because that's what the normal, typical person is looking at. Like, hey, my money is losing value in there. And then on top of all of that stuff, there is a free commercial running every year called 1040, because on it, there is a checkbox that says, have you invested in Bitcoin? Have you done any transactions? So like, wow, means like 30 million Americans at least will look at, hey, what is that Bitcoin they're talking about? And if the government is interested in it and asking me about it, shouldn't I try it? And then on top of it, you get all the people talking about what Tesla done with it, what Grayscale done with it, and all the investments going there. So I think that in itself will generate at least a curiosity from people to look at what are those new tools that exist over there. So I'm curious to know how the rest think about it.
I like the city of curiosity. And adding to the previous question, Tyler, well, we still have, like, despite the many benefits of decentralized protocol in terms of community, we still have like only a couple 100,000 users at most. So how are we supposed to incentivize this curiosity more and bring more people into the space?
Yeah, so I think that answering that question is kind of twofold. Like, you can look at it from like a volume perspective. So like, there's still the 80-20 principle that exists. Like 20% of the users are going to bring like 80% of the like actual volume in TVL. I think in DeFi, it's probably going to be closer to like 595. And the reason for that is the very large institutional players, they really have not come in a meaningful way in terms of actually like using DeFi protocols, right? Like, I've talked to $30-40 billion hedge funds that have like bought the governance tokens of DeFi protocols on like Coinbase custody and some of those places, but they're not essentially actively yield farming or depositing into Aave, even though you know, there's not like really a better place that you can actually get yield in the markets. Even though they're suppressed right now, they're still substantially higher than like traditional bond yields. So like, in order to get that across the finish line, we kind of need two things to come about. And the first one would be like institutional grade insurance. So like the largest like insurance like groups in the world that insure hedge funds and like their positions and strategies. Like maybe there's $20 million of like underwriting available. And that's not going to be sufficient for like the billions of dollars that are trying to come in. So like off-chain insurance that insures on-chain contracts is going to help. Like time in market and trust is going to help. And then I would also say that from a regulatory perspective, a lot of these larger funds are unsure if they even can like dabble in like DeFi, or if, you know, moving from USDC to like AUSDC or CUSDC, like what that means from like their reporting perspectives. So in that respect, I don't think that anything's needed other than more like regulatory clarity, as opposed to like, you know, just letting them know what they can and can't do. But that's on like the volume side. That's how you're going to get like the 5% that bring in 95%. I think that very likely will get pushed forward by just sheer numbers, right? Like if you have 10 million people around the world that are using DeFi, at that point, it starts to get more and more real. Like 100,000 users or even $50 billion isn't the same as 10 million users at $50 billion, right? And I think on that respect, probably the same from a regulatory perspective, where you're not now thinking about like like institutional money managers, but even like fintech companies that could essentially plug into DeFi very easily and like onboard tons and tons and tons of users, like a PayPal, a Robinhood. Like they don't also know that they can just plug into a DeFi rail and essentially what that means and how they report it. So a lot of the actual users, by the time that we hit those tens of millions of users in DeFi, they're probably not even going to know they're using DeFi. Like they're not going to know that they're plugging into Barnbridge. They're not going to know they're plugging into Alchemix. They're not going to know they're plugging into Aave or Compound. They're going to be using them on other applications where they utilize them at the protocol level and they exist as the application interface.
That's an interesting observation. Scoopy, you really had a very interesting story this week, and I'm personally really impressed how empowered is your community, because in my opinion, well, no user of bank would ever do what your community did for the project if the bank lost its money. So my question to you is how do you think we could scale this empowerment for the community while it keeps growing?
Well, I think like as far as the Alchemix community goes, like shout out to our community. They're really awesome. You know, we had an unfortunate bug that led to erroneous debt repayments that led to our new synthetic asset, ALETH, being under collateralized. Luckily, our community has donated already more than half of this debt payment that happened. And it looks like we'll probably have enough like to cover it and have plenty of runway left to spare for Alchemix. So we'll be going forward and we'll be going strong. So it was, you know, it was like a punch to the mouth, but it was okay. Thank God we have an amazing community. And I think the way we need to build it is like in our Discord. I'm really connected to our community. I go in there like all the time, talk to them, and they're really great in there. And there's a lot of people who feel like they're priced out in Ethereum. I know recently, like it's been like, you know, 10 Gwei for transactions the last couple of weeks and stuff like that. But, you know, a lot of people were complaining like, when are you going to be on Matic? When are you going to be on BSC and things like that? There's like this like great crying out for like all those people who, you know, want to be in DeFi and want to do these things, but they can't afford it. So I think the thing that like we really need to focus on in Ethereum and DeFi is scalability. I'm really, really excited for ZK rollups and optimistic rollups as well. So things that like Starkware, ZK Sync, Optimism, and Arbitrum are doing are all really, really cool. And our team at Alchemix has started researching these and like playing around with some of the demo stuff that's out there. So it's definitely something we want to target. And I think that like if we can bring DeFi to the masses, so it doesn't get gobbled up by some top level application that boomers use, that like hooks into the DeFi rails. But if we can actually educate people to use these like tools and stuff like that, then it'll be really empowering. And I think that's the future that I want to see. But I kind of do agree with Tyler that we probably will see like, these kind of DeFi super apps being built that harness all the DeFi rails, and people aren't even sure that they're even using DeFi. It's just, some app on their phone that they don't really understand like where all these yields are coming from, but they're getting them and they're happy with them. I definitely see that happening, but that's even really cool in and of itself, because that's, these other people like bringing you business, and you can capture that as a DeFi protocol.
What's the time horizon in your opinion? And what are the prerequisites? Like when we actually will see people using DeFi applications without knowing that it's based on blockchain, etc.
I mean, if they provide regulatory certainty, I think that it would start next month. Like that's the easiest answer. Like I think maybe not a month because it's going to take time to code it all. I agree with Scoopy that like in a perfect world, I'd love to see, like we have a super active Discord and they're very, very intelligent people. I think Alchemix and Barnbridge are probably at a CFA 2 level of finance understanding mixed with like also being relatively complicated from a tech perspective. So while I would love to see that, I still have to be kind of honest with myself that like the average person that's using like a certificate of deposit at a bank probably doesn't know where that yield's coming from either. And, like even people that were buying mortgage-backed securities definitely didn't even, I don't think that they understand counterparty risk, and I don't necessarily think that they need to, right? So, I would love for the whole world to be as empowered as the people in both of our Discords to understand that degree of where things are coming from. I just don't know if the average person, like, in America at least, is ever going to be on that level of financial understanding. But the yields are real. They're going to real places. And once you start to provide some of that certainty from a regulatory perspective, then we can start bringing real world assets on chain, real world loans on chain. And then, the applications can plug into it. The big boys and girls can essentially come in at the institutional level. I think that's the end game probably. I don't even think the average person that uses Robinhood knows the difference between like a centralized order book and an automated market maker. I don't even know that they know what the margin is that they're using. They just kind of get on Robinhood and play around. And I think that's the realist in me thinks that's going to be the outcome. But I just don't think it's going to. I think that we'll continue to slowly grow at the clip and rate that we've been growing at over the last couple months, as opposed to like the whole like past year and a half, until there's some questions answered that will bring down some of these guardrails. Even if it increases guardrails in some areas, it at least gives us something to work around.
But it's interesting that you mentioned average person in the US, because like average person in the US is much, much more above any average person in so many other countries. So like, in my opinion, the entrance barrier is still a big issue. And in terms of education, as Scoopy mentioned, in terms of availability and in terms of, traditional finance legacy, of course. Adel, so those allow users of a protocol to own the protocol, but there's still uncertainty that DAOs can compete with traditional finance organization. How and why do you think will they remain competitive?
Because of the simple fact that in a traditional financial institutions, you have all this institution, all the people working in them, and they have competing interest. One is to produce the profits and the gains for their shareholders, and then for their own selves in terms of payment and so forth. there. But in a DAO, the shareholders are the people usually using the system. So the interests are aligned in there. So imagine you and me and Tyler and Scoopy are basically managing something for our own benefit in it and voting on it, participating in it. The example that Scoopy outlined in terms of, like mistakes will happen and the things will go wrong. But because you have the community around you and we make decisions together and we go the road together, you find the community just behind you, trying to build with you, supporting you in the system. Nobody will do that for something that is designed for gains of others in there. That's the big difference, that we have a community and the community builds. Blockchain is all about community. Without community, there is no such thing as blockchain. That's what I'm thinking.
Nice.
Yeah.
Oh yes, community is so important. And in my opinion, it's been so exciting to see that this decentralized year where so many people just couldn't even meet, members of the team, colleagues, friends, like so many exciting things are happening on like community platforms that even at some point you think, well, that's a great opportunity. And there is this positive impact, of course, by any negative thing that is happening. Scoopy, you and Tyler as well built your products on top of other DeFi protocols without asking permission, of course. How much faster do you think can DeFi move due to composability? Like how important it is for the community of developers to build a new reality for the DeFi space?
I mean, that's one of the reasons I'm so bullish on DeFi in general, is because of the composability and just how it's such an open system. You have all these contracts that can then call other contracts, and then these contracts can call other contracts, and they can all talk to each other. And and a lot of these things are fairly simple. So you deposit something and you get, somebody else can borrow it, and in return for borrowing it, they can get an interest rate and stuff like that. And there's like all these simple building blocks, but when you can mash them together, you get something like Yearn, which provides liquidity, and with that liquidity, it makes the markets a lot more liquid, and then they earn governance tokens that liquidate. Well, not all of them, but sometimes they keep them for strategies for long-term investments and stuff like that. But then they return that as yield to people, and it's like this really crazy machine that they've made that's automated a lot of the yield farming, and then we can build stuff on top of that. And then the cool thing is that in our Alchemics V2, which will be slated out for later this summer, we're going to then open up our contracts to let people build on top of us. So it's gonna we're gonna become a Lego brick in and of itself. So I think that's really cool. We're actually going to build on top of ourselves using our core protocol as a Lego brick. And it's really cool because there's lots of protocols, like Barn Bridge over here with Tyler, and there's other ones out there that also could synergize with each other, and we can build new things with each other. And I think that space for collaboration and building together with other, builders in the space is something that makes us, it's DeFi's moat. It's what differentiates us more over, CeFi, is because we can do these things. It's programmable. It's, we can talk to each other. It's great. It's one API.
But isn't it also dependent on
the permission to do it, right? That's one of the best things about it is also one of the things that I think Scoopy clearly shares the same passion as me on how some of this stuff works from a composability perspective. And is it Dr. Adel? I'm sorry, is it Adel or
Adel?
Adel, okay. So I mean, he was talking about his community too. So where I wasn't trying to be a buzzkill saying that most of the users aren't going to know they're using DeFi, because I'm more talking 10 million users, right? 100 million users. But what will be cool is when that happens, what we love about it is also going to grow. That's going to attract more passionate people into Discord. That's going to push more people to learn Solidity and Rust, if that is where a lot of the development's going, or Cairo if it's on ZKs. like, and even just like the passionate communities that just love to nerd out and do want to talk about like the more complex aspects of finance, like that's going to grow too, right? Like, because a lot of those users are going to trickle in and become people that will build with us. And I think that some of what needs to happen there, we're working on as an industry. Like Scoopy was talking about all the same like layer twos that we're looking at, right? And as a money Lego, we can only plug in. I mean, we're building primitives that we kind of control our own layer two destiny. But from a composability perspective, like I plug into Compound, who's not on Polygon, or not me, but like Barnbridge, right? And basically, we can't just go put like Compound on Polygon unless they build to it first, unless we were like going to go fork them or something, which we're not going to do. So like Aave, we can put on Polygon, right? And so as more groups move to like Optimism, to Arbitrum, to all of the ZK rollup solutions, there's more. I mean, I see exciting like scaling solutions all the time, and then even like Ethereum is working on ways that we could essentially scale with ETH2. That's going to make it a lot easier for like new developers to come in and even essentially just build an interface into like what we're building, where like there's like protocol layer, like permissionless integrations. There's like integrations that need to go through governance. And then there's just like an interface that you can essentially do cool things with. So as we grow and scale and get more users and the networks become more stable and scalable, that's going to increase everything, including a lot of what I think attracted us to the space in the first place. And that's why I don't think it's going to go anywhere, because it's a lot more fun to build in DeFi than CeFi, TradFi, or I mean, any other industry I've ever been in. But good luck to the investment bankers that are, you know, making those kids work 100-hour weeks, weekends right out of school, because you can get the same intellectual stimulation working in a DeFi Discord. Show your worth, get compensated, and start building with people that are very, very intelligent and very, very driven. And I agree with Scoopy. I think that is a very strong moat that is going to be tough to beat.
Awesome. That could be an awesome, ending of the panel, but we still have 5 minutes. So my last question to you guys is, how do you see the future of DeFi, let's say in the next year? Is it multi-asset? Is it multi-governance? Is it community centric? Is it whatever? Dr. Adel.
So that's a perfect opportunity to put a shameless plug in, because what I see in DeFi is it's a Lego, and it allows speed of innovation. So while in the normal world we have to go through a lot of hurdles, in DeFi we can just come up with an idea literally after this panel, work on it on the weekend, and on Monday it's up and running, and people can judge whether it is good or bad or how it will go from there. So experimentation like that, same thing that happened in Silicon Valley, but on steroids. It's global. Anybody, any couple kids, anywhere in the globe come up with an idea, and they basically can build it, and they will find the support from all the communities and the giants in the field to kind of like, hey, this is cool. Let's put it out there and push it forward there. And then things like Delinda, which basically allows micro lending, something that could not be done within the banks globally, turns the globe into a really global village in there. That could not be done. So then this will come up there, and we'll see an acceleration of those new ideas to the point where the CeFi can't even think straight around like what they are trying to do, and they will simply have to adopt it, just like what they have been starting to go there. And you go to your bank, it's like, do you want a checking account, saving account, or a DeFi account? And all right, that would be a wonderful day next year.
Awesome. I get to learn how many ideas will come after this panel. And I'm pretty sure that Stani, who missed the panel, actually has been developing some idea right now. Scoopy, your last thoughts?
I mean, I think we're just going to continue to see innovation from new teams that we don't even know about, and from the existing teams as well that are out there. You know, it's an arms race, and everyone's out there trying to make the best DeFi protocols out there. You know, Uni's got V3, Bouncer's got V2. You know, like we're probably going to hear more stuff from Sushi soon, and like, you know, Synthetics has got stuff. I know like Alchemist has a V2 we're coming out with, and I know, you know, everyone's just going to be pushing innovation, and you know, like it's going to be painfully obvious that DeFi is the superior option, and you know, I think we're just going to have more and more people join the system and join the ranks, and you know, our total addressable market's only going to continue to grow.
Awesome. Friendly and creative arms race. Yeah. Tyler.
Yeah, I mean, I think that we're still building like primitives right now, and like we just started getting into like derivatives and money Legos. I don't know if this happens in a year, but I do think that if you even look at the way that we are working right now, like the usability of DeFi versus even just, let's call it fintech and not like CeFi, it's drastically superior from like a UI perspective, and from a user experience perspective, it's getting better and better. And I think at like a really high level, we're gamifying finance. And I think that not only is that true from like the perspective of we're just making finance more fun, and like, if it's not community driven, then I mean, I don't even know what I'm here for, because that's kind of the whole point is like you have this community of people that are like playing these games with you, and it feels like games, whether you're winning money or losing money. And I think that that will probably get amplified by additional derivatives built on top of the other derivatives, gaming coming into the ecosystem, like NFTs, media. I think at some point that stuff's going to start to converge at a rapid clip, in the same way that even like right now it's like primitive, and then like money Lego, and you've got like a couple money Legos, like Barnbridge and Alchemix being them. Then you're going to have money Legos that merge those, right? And then if you start adding in like the NFT innovation and a lot of the gaming innovation on top of that, well, then we're going to branch into those. And then it becomes this like mesh network of gamified experience mixing, like literally games, finance, media, NFTs. And at that point, I think that you fundamentally changed like what finance even is. But and again, I don't know if that's going to happen in a year, but that's where we're headed, with how these dots are connecting.
Awesome. Thank you very much. Thank you, Global DeFi Summit, for organizing this wonderful discussion. I learned a lot, enjoyed a lot, and honestly, guys, like the community is what makes this space incredible. It's games, but it's also like making your dreams come true, and it's about building up a sustainable and bright future for as many people as they want to join the space. Thank you so much, and have a great day. Enjoy the following panels.
Bye, everybody.